his thoughts on that Moody's downgrade from Friday that was weighing on the market. Plus, today's pullback comes after a standout week for the bulls, of course, which saw the S&P jump more than 5%. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors Head of Research and Fundstrat Capital CIO. Happy Monday, Tom. Good to see you in.
Yeah, happy Monday.
You really haven't been unnerved by anything since Friday night, have you?
No. I don't know if there's much signal in the downgrade Friday, because I think the first AAA downgrade was signal from 2011. I don't think Moody's had any information that we didn't have on Friday afternoon. So I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity. That
said, you're not discounting the notion that the vigilantes have been reawakened a bit?
You know, I think everyone should be aware the U.S. has an unsustainable path for debt, but I think the real signal will be when an auction fails. That happened a few years ago, and then we realized that was the time to really pay attention to the fact that we have debt sustainability issues. But I think a downgrade itself, I don't think it is much signal.
So we reclaim the 200-day. Is that a clear path to a new high, as some of the trading desks suggested this morning?
Yeah, in fact, I think today will be an interesting test. I'm assuming today's pullback is going to be really shallow, might even close positive, because most investors rage sold at the bottom in April, and then they doubted.
Rage, I hadn't heard that.
Yeah.
That's a good one. Is that your own, or have you heard that other place?
I've heard that, yeah.
Rage sold.
Yeah.
Sorry, go ahead.
And so as the markets climbed, a lot of people sort of doubted, thought it was a rally that would fail, and so I think there's $7 trillion cash on the sidelines, enormous skepticism from our institutional clients, and a lot of folks sort of bet outside the U.S., so I think there's going to be a lot of chasing into year-end.
Although, a lot of shorts have been covered already, though. A lot of the hedge fund guys who actually got it wrong and rage sold, to your point, are in a very different position right now in terms of positioning.
Yes. No, and there's a difference between being short and versus having positive beta to risk assets. So I think most people might be flat on their books, but if the market is above its 200-day, showing this sort of impulsive buying, and you're flat, that means you're underinvested.
How are you evaluating potential changes in tax policy? Obviously, the market has been very reactive to any headlines on tariffs. What about this one?
Yeah, in fact, I think as we start to think about 2026, and it makes sense because we're in the mid-year, there is not only tax policy that can be a tailwind, it looks like it's going to be, but it's deregulation.
Sure.
I mean, several published pieces show that regulatory cost for U.S. companies is over $2 trillion, maybe as much as $3 trillion. It's a bigger deal than the tax cuts itself.
Yeah, obviously we've been waiting for some time about the regulation. So in this environment, the ever bullish Tom Lee, what are you looking at when it comes specifically to the Magnificent Seven? We watch those so carefully, but the NASDAQ, of course, under pressure here today.
We think the Mag 7 is going to lead into year-end because it's a group that fell first. It was widely owned, but it really got washed out. I think Tesla was a really good sort of case study. So I think the Mag 7 is going to reclaim its old highs. That's, of course, why the S&P should regain its old highs and of course, actually move above that before year end.
And what about financials? That's obviously an area that so many people were looking to early on. Is that still on your radar?
Yeah, financials are important. You need the banks to rally. They have been. You know, if I was going to make a case for multiples expanding, financials is one place because not only did they prove themselves actually pretty resilient during Fed hikes and during this turmoil, but they're kind of more tech-intensive companies with better credit profiles. So I think multiples should go up.
If we do revisit the highs, what needs to happen to push past that? I mean, how firm of resistance will it be?
Well, I think investors have to look past tariffs because if we're only trading tariff headlines, the markets are going to be range-bound. But again, as I look at 2026, I'm looking at companies that are battle-tested. They survive the tariff headlines. There might be freer trade. That's an upside to earnings.
Freer trade than we thought.
Yes, than we thought, yes.
But earnings estimates have come down, have they not?
Yeah, but they're going to flex in both directions, meaning I think if we have deregulation, possible improved ability to export, you know, tax cuts, that actually all supports higher earnings. But I also think the multiple for the S&P should be going up because, again, we've taken away a Black Swan event. I mean, we did, you know, the February to April period was a Black Swan for stocks.
Do you think the downgrade hurts the push for tax cuts?
I think it's going to have almost no effect.
No effect?
Yeah, because at the end of the day, the bond market prices what they think the rating should be.
I don't mean a market from the market standpoint. I mean from the political optics standpoint.
Yeah, it might, but at the end of the day, the U.S. really wasn't AAA anymore because it was only 1 out of 3, so it's like not even a split rating, AAA.
So, Tom, is there anything out there? I mean, and to be fair, you've been bullish throughout. You were right during this period when a lot of others sort of, whether they rage sold or just got upset in general. But what, if anything, is top of mind for you in terms of a concern?
Well, I think the most important is the consumer has to stay healthy because right now we're seeing this huge divergence, right? Like the UMich surveys show banana-level inflation expectations, but the realized is low. If the consumer gets super cautious and retraces, then we have a recession. So I think it does come into consumers have to stay confident and keep their jobs.
And so you're a believer in the data versus the sentiment?
Yeah, at the moment, this divergence between inflation and realized is actually the largest I think ever recorded for UMich. And so I would say as long as inflation doesn't explode, then the consumer has marginally a chance to become even more positive.
Wow.
Yeah, a lot of your former colleagues at JPM think that the hard data will catch up to the survey work.
Yes. And I'm paying attention because, of course, JP Morgan, they do a lot of homework and they've got credit card data, so we do have to watch it.
Sure.
So we just have to hope for the best.
Tom,
Always.
good to see you. Thanks.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It's Monday, May 19th, and it's after the close right now. We just saw a clip from CNBC earlier today. Tom Lee was on there from Fundstrat, and he had a few ideas about where the market's going. We're going to take a look at those. We're going to look at the indices. We're going to look at Tom Lee's ETF, GRNY, the Mag 7 stocks in this video. We're also going to take a look at some member requests, and we're going to look at the sectors. Let's talk a little bit about what Tom Lee mentioned in the video. He said, I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity. That's interesting. I would think that it would be the opposite effect, right? But, right, isn't a country that's a little bit, that has that AAA status a little bit more investable, at least from other countries? I would think so. I mean, the markets are moving up right now, so we're going to, like I said, we're going to take a look at that. He also mentioned that the Mag 7 is going to lead into year end because it's a group that fell first. It was widely owned, but it got really washed out. So yeah, we're going to look at that as well. So let's take a look first at the markets and see how they performed today. So we have, as you can see here, it's 4:20 p.m. as I'm recording this video, and the Dow Jones up 0.32%. The NASDAQ is up 0.02 at the end of the day. S&P 500 flat 0.09, and the Russell 2000 was down 0.42%. Here's the heat map. You can see there's a mix there. Microsoft was up, but Apple was down. Tesla was down 2.25%. The energy stocks did not do so well today, but the healthcare stocks rebounded a little bit. UNH was up 8.21%, for example. And what about the sectors here? We can take a look at this real quick. You see healthcare, utilities, basic materials. They were the top 3 performers today, and energy and consumer cyclical were down the most. And here's the 1 week performance. So what we're going to do now is take a look at the indices first. And we use the Ichimoku indicator. It's a Japanese indicator, originally incepted in the late 1930s, published in the late 1960s, okay, invented in Japan, and brought here to the U.S. I think it was in the 80s that it started to become popular. A lot of financial institutions that use this indicator that you see right here, the Ichimoku cloud. And of course, many of you are familiar already with Japanese candlesticks, right? So that's also an invention from Japan. Anyway, we're going to use this indicator. It's going to help us identify the trend of these markets. If you're not familiar with Ichimoku, you may want to check out the prior video. I went a little bit into detail about how to read this indicator. Okay, I don't want to go into it in every single video that I do. So check out my prior video, the one with Josh Brown, okay? Let me see if I can show you what it looks like, that video. Here we go, right here. That's what it looks like. Josh Brown, I posted that 3 days ago. And by the way, over the weekend, guys, for those of you who are interested in check out my members only video, I posted that 2 days ago. It's a 48-minute video. I go over my entire portfolio. And if the way to access this is by joining and becoming a member. Click the join button right there and either become a Blue Cloud trader or Blue Cloud Legend level member. And you can access that video along with all the other member videos that you see right here. If you want daily post updates on my trades, you can find them. Once you become a member, you'll have this little membership tab that pops up here, and you can access those as well. Okay. All right. So let's go ahead and get started here. So Dow Jones today, here's the weekly chart. I'm going to switch it over to daily since we are on Monday today. And you can see that, yes, it's above the 200-day moving average now. That's the 200-day is that dotted yellow line that you see right there. Price is also above the Tenkan-sen, the 9-period moving average for the Ichimoku. And it's like 5 days now above that. It's still moving up in a nice uptrend. ADX is moving up. That means the momentum is increasing. That's that white line. If that white line is moving up and the green line is above the red line, okay, that's a positive sign that the momentum is still to the upside here for the Dow Jones. This is the 2-hour. You can see that it all started happening. Remember, it's the market or the stock or ETF or whatever it is that you're trading, currencies, it doesn't really matter. Bitcoin, if price gets above the Ichimoku cloud, that's a bullish signal. It happened right here back on April 23rd, and since then it's now up over 6.4%. Let's take a look at FEZ. That's the Euro Stocks 50. Last week I mentioned that this was looking the strongest out of the indices. That's why I have it flagged right here. I had it flagged on Friday. It was up 1.14%. It actually did, in fact, beat the other U.S. indices like the Dow, the Russell, the Qs, and the SPY, which were basically flat today. There's a lot of money going into Europe. There's no question about that. There's a shift happening here. The VIX was up 4.29% also, but we'll look at that in a second. So the FEZ looks good on the daily. It looks good on the 2-hour. I have nothing negative really to say about it. Russell 2000, let's look at the daily chart. It is stalling right here at that 209 level, 209.27. That level is actually based upon, let me show you this little high right here. Okay, so that is where it's stalling again. Whenever price comes back to a previous high, expect price to stall. Sometimes what it does also is it might build a little base like you see right there. See how the candles are very, they're just kind of consolidating in a horizontal kind of way there. So there's a good chance, like once it breaks to that high there, that 209 level, and if it happens on higher volume, you want to look at the volume bars too to make sure that's a big volume bar. You don't want a small little candle like that or a volume bar. You want to see a green candle, preferably breaking through that 50-day moving average, which is the white line that you see right there. I mean, this is a perfect example right here. Going back in time a little bit, you can see on April 9th, for example, that larger candle, okay? It also developed that bullish engulfing pattern, which is when the larger candle, the following candle, is much larger and engulfs the prior red candle. So that right there, a bullish engulfing, is what occurred. We had it on, it also happened with high volume, and it led, as you can see, to this nice uptrend that we're experiencing right now. All right, and that's on the daily time frame. If we look at the 2-hour, all right, again, this is on April 23rd is the date that it broke through that cloud. It's moved up the Russell 2000 has actually moved up. Since that opened above the cloud, it's up over 8.4%. Here's the QQQ ETF. Let's look at this on the daily first. Also consolidating right now, just a little bit. You can see it's just flattening out right there. Again, building a base. If it needs to break through that high. If it starts to weaken and break under these two levels here, that could be trouble for the Qs, but I don't see that right now. There's consistent buying happening. Look at all those bullish volume bars down below, and price is moving up, so that's good. And this is the 2-hour time frame. All right, but it is kind of like just flattening out. And by the way, you can also use the ADX to identify that flattening out process that's happening. So again, when the white line is moving up, momentum is increasing. It's pushing the price up further. When price starts to stall, as it is here, you'll see the momentum coming out. This may also mean like, hey, maybe things are getting a little bit extended. Maybe there's a lot of people taking profits as well. Maybe the market just needs a breather, okay, to evaluate where it is right now and should it continue moving up. What's the cause? What's the reason that the market should move up, right? There's got to be a news event or catalyst that leads to that further move up. So we'll see what happens. But it was only up 0.10% today, so nothing really major here. S&P 500. Let's look at this on the daily chart first. All right, moving up steadily here. Broke through that large engulfing pattern there, April 9th. The engulfing pattern, by the way, it looks, I'll just show you again on the candle pattern reference sheet. It looks just like this, right? Bullish engulfing, small red candle followed by a large green candle. You can find this cheat sheet if you want on my Twitter page, which is @BlueCloudTrader. It's also on a link on my site. You can find that link right here, which says 9 more links. Scroll down a little bit. You can find all the links right there. There's the Twitter page. All right. So S&P 500 still moving up. Here's the 2-hour time frame. Steady uptrend. There's nothing really to be concerned about here as far as the trend moving up. I don't see any danger. The VIX, however, did pop a little, up 4.29%, but it's still under the Tenkan-sen, under the Kijun-sen. We want to see that. That means that it's declining. We want the VIX to be under the cloud, under the moving averages, preferably, so that the market can continue moving up. Now, a lot of you may or may not know that Tom Lee, the guy that was just on CNBC, the interviewee, he has an ETF called GRNY, is a ticker symbol. It's called Fundstrat Granny Shots, U.S. large cap. And some of the stocks that are in there are mostly, they're all mostly large cap stocks, basically. If you wanted to find out which specific stocks are in that, I think we can type in, let's see here, FinViz. And then type in GRNY. Let's see if there's some information. There might be some info here on you can see a little bit about the holding breakdown. So it's 28% of the stocks in GRNY are in technology, right? And industrials only have 2.6%. Here are the top 10 holdings. You can see Tesla is one of his top holdings, actually. Advanced Micro Devices, GE Aerospace, Alphabet, okay, Monster, Netflix, Nvidia. Pretty much if you want to see all of them, you just click on Show All here, and we can see all the different stocks within there. Now, this is called FinViz Elite, what I'm using here. The software that I'm using is called TC2000, and there's a link again on my page there for TC2000. You can get a $25 coupon for this. All right, so let's look at let's analyze GRNY, guys. How's it looking right now? It seems to me like, again, it's just kind of flattening out. It's creating a little base, right? We've had the run on the 2 hour. This is a 2-hour time frame that we're looking at. Price popped above the Ichimoku cloud back here on April 22nd. And since that point, it's moved up 22.43%. Where did this is a relatively new ETF. It was introduced on November 7th. And so it's still relatively, it hasn't really moved up that much. I mean, if we look at the opening price back there on November 7th, it was around $20. It's at $21.10. It's only up about 5% for the year. It did have that huge decline there. But again, the technicals can help us identify the appropriate time to get back in. And if you're using the 2-hour time frame, you can use that, for example, or you can use a daily. It doesn't really matter what time frame you trade. You have to determine that for yourself, what that's going to be. But the earliest time frame I would use is a 2-hour before considering adding a stock position if you're looking to hold it for more than a day. If you're day trading, you can even use a 5-minute. You know what I mean? So, okay. So GRNY, it's coming close to now a level of resistance of 2134. You can see that right there. It's based on that prior high. And so that's where we're at. We're right at that level. It's a level of resistance. And many times people start taking profits when you get here. Now, if it can break through that level, then I can see an expansion taking place. Till then, I'm very suspicious, and I would not be interested in jumping into this right at this point, right? That wouldn't make any sense to. On the 2-hour time frame, it's had a nice run. You know, it's rare to have a really extensive long trend up unless there's good reason for it. All right, let's take a look at the Mag 7 stocks next. All right, so we're going to start off with Microsoft. I want you guys to pay attention to something here, guys. There's only one out of the Mag 7 here that basically has that flag, that I flagged it, and that's Microsoft. Why did I flag this one? Because it's the only one of the 7 stocks here where the technicals are pretty, I mean, they're pretty ideal, except for the cloud here. You can see the cloud is still bearish. But one positive thing that I'm noticing here is that the Tenkan and the Kijun for the last couple of weeks now has been around the same level. Okay, that's good. That's a good thing. We can see the Chiku span. That's the closing price from for the week, right at that level. Do you see how it goes at back 26 periods? Now, when you see that white line is above the candle 26 periods ago, that's bullish. When it's under, like it was over here, under the candle, that's negative and bearish, and you can see that decline that had happened. So it's looking good for Microsoft on the weekly. Here's the daily chart. You can see that steady uptrend, and everything looks really bullish here too. You get the Senko Span A, which is part of the Ichimoku cloud. That's above the Senko Span B, right? So Senko Span A above Senko Span B. You've got the Tenkan, the 9 period. The green line is above the Kijun, the red line, the 26 period. Price is above both of these moving averages. Price is also above the 200-day moving average. Price is above the cloud. That's it. That's all you need to know, basically, with this indicator. And it's very easy to identify when price is in a strong uptrend. If you see price under the cloud, it's usually not an investable place to be because it's hard to pick the bottom. We want to look for a change in direction, a change in sentiment, and you can see there that it happened. It started happening once you broke that trend line right there. It entered the Ichimoku cloud right there, but generally I like to wait until price gets above. Now, some people might say, "Oh, you're getting in kind of late, aren't you?" If you do that, well, if you enter any other time when price is under the cloud, you're really just gambling at that point. You don't really. It's almost impossible to recognize if which of these places is the right place to enter. You know what I mean? It's almost impossible to know. At least with this the rules here of Ichimoku, you've got something. Now, if you want to enter earlier, okay, then this date right here, for example, on May 1st, you switch it to a 2-hour time frame. Now you start trading it based on the 2-hour time frame. And when did price pop through that Ichimoku cloud? It happened right here on Microsoft, right on April 23rd, Wednesday. That seemed to be the big day where a lot of the stocks did well. Since then, it's moved up 20.66%. All right, so that's how you can counter. If you're not someone that has the time though to be looking at the 2-hour time frame, the daily is not a bad way to trade it. You can have these daily charts can stay above the clouds for very extensive periods of time. Like over here, you go back in time, it stayed above the cloud until that point right there. It was a 17% move in 5.7 months. All right. Here's another point right here where price got above the cloud. Then it got back in right there. That was a 28% move in 6.1 months. And when you get out of a trade when price gets under the cloud, like it did right here, you can also benefit by not staying in it on its decline. Over here, you can see that Microsoft declined about 16.36% in 2.2 months. So that had your money tied up, basically. And who knows how long it could be longer than that period of time. It could be 3 months or a year. So that's part of the reason why I like to utilize this indicator. Okay, so let's see how this looks on the 2-hour. Again, it looks very bullish still. I like what I'm seeing. I think Microsoft has more potential here. Let's look at Nvidia. We'll start off with the daily chart. Nvidia has recently broken through some levels of resistance last week, for example. You can see that it's holding up above these areas here. The Ichimoku has become bullish. Chiku span is above price. On the weekly chart, okay, we don't have all the elements there yet. And what I mean by that is the faster moving average. The green line is still under the red line. Okay, but we did in fact break. You can see that right there. There's a little bit of a downward. Just throw a little trend line right here for a second. We did break through this little decline, right? You can see that price broke through that level. We're above the Ichimoku cloud, so I expect it will continue moving up. Here's the 2-hour on Nvidia. So right now it is stalling. All right, it's just been like this since we're on the 14th of the month. Okay, so 14th, 15th, 16th, all the way up to, so from last week, Wednesday of last week, it's pretty much stayed in this little range here that you see. I'd be watching it. Just keep an eye on it. Notice how the ADX is dropping. That means the momentum is coming out. There's maybe, some selling taking place. Google popping through the Tenkan-sen today on the 2-hour, all right, at the end of the day. That looks good. Here's a daily chart. Google is still, it's re-entered the cloud. So this is, in order to get through that cloud, it has to at some point break into it, and that's where we're at right now. It is finding some resistance here on the 200-day moving average, though. It found it right there, and now it's finding it again. So, we're almost there. I think if we get some more positive news, Google could certainly break through these barriers here. This is what the 2-hour looks like. We can see that it did pop over here on on May 14th, but it hasn't really moved much. All right. Here's Tesla. Let's look at this one on the weekly chart. Stalling at the Kijun-sen. It was down 2.25%. Maybe you guys remember from last week I mentioned that, right? Price had reached a level of resistance. That's a really important level. It's the 26 period. It takes the last 26 candles, takes the average, the midpoint, and then it plots it right there. And so that tends to be a level that is respected many times. And so you can see it gapped down, right? So it gapped down this morning and it's kind of stayed under that 26 period. So let's see what happens. Here's the daily chart, kind of turning over a little bit. Again, creating a base. So we'll see what happens there. And then here's the 2-hour under the Tenkan-sen. So, yeah, Tesla's had a nice little run, though. Amazon, a weekly chart. Tenkan-sen is under Kijun-sen still. Daily, it's above the cloud. We're in the beginning stages here on the daily. On the 2-hour, it's pulled back a little bit. You can see that it had reached this high up here around 214, and it's pulled back, but now it is fighting that 206.21 level. So we'll see if we can break through there. Here's Apple. Let's look at this on the weekly. It's inside the cloud right now. Daily chart, inside the cloud also, and then 2-hour is breaking above the Tenkan-sen. So we don't have a lot. It's just a lot of noise, basically, as far as I'm concerned, on these daily and weekly charts. I don't really like that. It's still in a decline, as far as I'm concerned. And Apple will be affected the most out of all the stocks, I think, due to the China situation that, they're really reliant on China. So the tariffs are going to be an issue for Apple. There's no question about it. Here's Meta. On the weekly chart, it is above the moving averages, but Tenkan-sen is under Kijun-sen. On the daily chart, it's above the cloud. And on the 2-hour, it is in between the Tenkan-sen and Kijun-sen. I call this the equilibrium zone here. So it's, once we break through that level, we'll see what happens. Look at it. It was only up 0.01% today. Nothing special happening here today in the markets. I'm not going to get into all of these sectors in ETFs, but I'll go through some of these. Here's industrials still in a nice strong uptrend on the 2-hour time frame. All right, we're in a very strong bullish move in industrials here, breaking through these levels. That happened here on Friday, and here we are on Monday. Actually, it happened on Thursday. Yeah, Thursday, May 15th, it broke through 141.90, and now it's continuing its move up. Here's Bitcoin, still holding up on the daily. There it is on the 2-hour. Looks okay. The IBIT ETF is coming close to a level of resistance, 61.75. It's about 2.7% away. Utilities breaking through, right? Continuing their move up. Here's the 2-hour time frame. I like what I'm seeing with utilities. Broke that long symmetrical triangle there. Gold what's happening with gold these days? Well, it did find some support. Let's look at the daily first. So it's been kind of stuck in this range here. Whoops. Right in here. You can see that little range. So it's on the bottom part of the range. It's bouncing off this little area right here, that low. So we'll see what happens. I don't like the fact that the Tenkan-sen crossed under the Kijun-sen. That happened today on the daily chart for gold. But the Chikou span is still above price. So that's very positive. We also have a bullish cloud. Senkou span A is above Senkou span B. On the weekly chart, also still looking very strong. It's finding support right at the Tenkan-sen. So I think there's a good chance that gold will continue to bounce here. You know, and then on the 2-hour time frame, it looks the most bearish. All right, so obviously, right, because it's going to give us more signals when you're on a shorter time frame like that. But the upper time frames, I'm not ultra concerned quite yet because we are holding these levels. As long as we hold these levels, I think we're good. If it starts breaking down further, okay, that's a different story. Maybe it's time to reduce positions in gold just to be safe. I guess that's the best way to say it. Okay. Sector, the material sector is looking pretty good on the daily. Here's the daily in the 2-hour. On the weekly chart, it also broke through the moving averages. So I like that. GDX is the gold miners ETF. That's still kind of same situation with gold, right? It's kind of in a decline, right? We do have lower highs and lower lows here on the daily chart. We can see that right there, that little downward channel. But this could also just be a bull flag, as they call it. So let me show you guys what that looks like real quick. It's a continuation bullish variant flag is what they call it. So what it entails is after a move up, as you see right here, price drops, moves up a little bit, okay, creating a lower high than the prior high. It drops some more, okay, creating a lower low from the prior low. All right, but then if price can break through this channel, that's very bullish, okay? But that's what we need. We need to break out through that level. Now, and what makes it more of a flag than anything else is the fact that it's just really small moves, like these little small moves like you see right here. It's not like a huge, higher high and higher low. So if we look again at this, these are small moves right here. That's why I think it's kind of that bullish flag variant. And if it can break through that trend line right there, I think we can see GDX popping some more. Right now, everything is just kind of taking a breather. And look, don't forget, we're also still above the Ichimoku cloud. That's one of the most important things to stay above, to remain bullish in this market. Here we came close to the cloud and it bounced. We came close over here and it bounced. So, yeah, okay. USO is under the cloud. XLC, whoops. I think I accidentally, let me see here. Yeah, that looks actually pretty good. I like XLC. Communication Services is looking good. SMH, semiconductors on the daily, looks pretty good. It's above the 200-day finally. On the 2-hour time frame, it's had a nice little run up here. On the weekly chart, it is just, it pulled back down 0.17% from Friday's close. So it's just kind of like on the weekly chart, the longer time frame is not looking that great. All right. I think that's all I want to do with those. I don't really want to go through all of these, basically. And let's take a look at some of the members' requests. FICO, which is the Fair Isaac Inc. technology sector. We get a bullish cloud. Price is above the moving averages, but Tenkan-sen is under Kijun-sen. And I'm always, again, more skeptical about entering a position when I see that. When I see the Tenkan-sen under the Kijun-sen, because it tells me there's some weakness here. That's the weekly chart. Let's look at the daily. Okay, yeah, I mean, it's showing some strength on the daily chart. So let's look at that weekly chart again. Yeah, so like for multiple weeks now, price has been moving up. And it does take longer for the Tengen-sen to cross above the Kijun-sen on a weekly chart. You have to have multiple weeks to do that. We are about 7.5% away from the prior target. I wouldn't be surprised to see it move up a little bit more to that level, and that's probably where we'll find some resistance. On the daily chart, like I said, it's still moving. 2-hour time frame still looks good. So if you're trading this on a 2-hour and using the daily as your, your upper time frame, so I'd use 2 time frames for confirmation, maybe the 2-hour or the daily. I'd say, yeah, it's looking good still. All right, let's look at GE Aerospace. Let's start off with a weekly chart on this one. This one recently broke through that 212.19, right? 3 weeks now. It's in a nice strong uptrend. On the daily chart, very strong uptrend. ADX is moving up. Remember what we talked about earlier about how important it is to see that momentum increasing. That white line is moving straight up. And again, you can see that after that pullback right there on the ADX, right there, where it's just where it started to move up, that's also where price started to take off. So I like it. And here's a 2-hour time frame. Very strong uptrend. Seems a little bit extended, but and on the 2-hour time frame, you can see that the ADX is declining a little bit, so there's maybe a little momentum coming out, but it was up 1.5%. All right, let's take a look at Robinhood Markets Inc. Weekly chart. Okay, this one's coming close to a 66.91 level, this prior high. How far is it from that resistance level? It's about 3.6%. So I wouldn't be jumping into this here. It's not the appropriate time when you're this close to resistance on a weekly level, especially. Here's the daily chart. Yeah, it's in a strong uptrend. It was up 4.06%, and I could certainly see it move another 4% before it stalls. And if it breaks through that 66.91, okay, and closes above on high volume, then okay, I'll say, all right, this is the time to probably add another position or a new position, or consider getting back into it. Here's a 2-hour time frame. So I like it. I like what I'm seeing overall. Did it take out this high? The high of 63.78? It did. It's at 64.27. So even the 2-hour time frame looks pretty bullish, but again, that 66.91 level is right there waiting. Guys, thanks for watching. Hope you guys enjoyed the video. Don't forget to like, subscribe. It really does help with the algorithm so that we can continue getting this out to more and more people. And consider supporting the channel by becoming a member, right? And just hit that join button that you see right there. Hit the like button, subscribe button, and share it with someone that you think might like this video. And I'll catch you guys all in the next one.